Constellation Brands is a gigantic player in the US market. It's a distributor of Corona and Modelo, the biggest selling beer in America. Now, it beat on fourth quarter revenue expectations, even though revenue was down year over year. Warren Buffett's Berkshire Hathaway began buying this stock in 2024. The shares are down more than 30% in the past year, or they were as of yesterday. We're joined by Filippo Falorni, Director, U.S. Beverages at Citi Research. Thank you very much indeed for joining us, Filippo. It's always great to talk to you. Can you just remind us, Constellation Brands, it's so interesting, they are the biggest beer company, or at least they have the biggest single beer in the American market.
Yeah, great seeing you, Andy. Happy New Year. Look, Constellation is one of the leading beer brand manufacturer in the U.S. As you mentioned, Modelo Especial 2 years ago became the #1 selling beer in America. Obviously, the last year and a half has been particularly challenged for them, given the weakness in the Hispanic consumer base. Remember, Hispanic consumers are around half of their business in terms of consumers. And clearly, since the inauguration of President Trump and the changes of the administration on immigration policy and the ICE raids that we've seen across the U.S., there's definitely been some negative impact on Hispanic consumer sentiment, on their willingness to go out and interact with and have social interaction, going out to bars and restaurants. That has negatively impacted the beer business. And you've seen it, as you mentioned, in the negative stock reaction. This quarter that they reported last night was another challenging quarter overall, -3% depletions, which is a measure of volumes. But it came in better, to your point, than expected by the market. So even though it was down year over year, the declines was less than feared, and that's why you're seeing the stock react positively in the pre-market today.
What is your actual rating right now on Constellation?
I have a neutral rating on the stock. Look, I'm a big concern on these dynamics in the beer industry. Beer overall as a category is under pressure, given younger consumers are drinking less. There's been a shift into other drinking options, including ready-to-drink spirits and cannabis-infused beverages. And then you have some impact also of GLP-1 drugs, that people that are taking those drugs are significantly drinking less. And then the other thing is this Hispanic consumer malaise has been going on now for over a year. The big debate is, can it stabilize in 2026? And so those headwinds become less on a year-over-year basis, or could we see continued pressure this year? That's ultimately, I think, what is going to determine the outlook for their beer business and ultimately for the stock.
It looks like you're not that crazy about the beer business right now, Filippo, in the sense that I think you have a neutral rating on both Molson, Coors, and Boston Beer.
Correct. Look, I think overall beer has been definitely a sector that is under pressure, as I mentioned, in terms of consumer preferences, in terms of overall volume trends in the category. I do prefer the energy drink space in the beverage category, given you're seeing really younger consumers increasingly going for non-alcoholic options. Alcohol has become under significant pressure across the board in the US, but particularly beer. Beer was already losing share to spirits over the last really 5-10 years, but that has even accelerated further. Some of it, as I mentioned before, is the younger consumer trends that are really shifting away from alcohol and particularly from beer, but also GLP-1 drugs, right? Like those people that are taking those drugs, they're clearly seeing a significant reduction in consumption behaviors.
That's interesting. I know this is not scientific, but I was putting out my recycling this week, my bottles and stuff, and I noticed we're not putting out many booze bottles. I think everybody's drinking a bit less.
Yeah, no, it's definitely a trend you're seeing in per capita consumption of alcoholic beverages that's clearly coming down since COVID. There was a peak in the early phase of COVID when everyone stayed home, and clearly there were more drinking occasionally even during the week. But clearly after 2021 and 2022, you really started to see a deceleration. And the interesting thing is that if you look at per capita consumption, per capita spending, among Gen Z consumers is significantly less than prior generations and significantly less than millennials and boomers. So that's, to me, is more of a secular trend in the alcohol space.
Among the soft drink companies, though, you do have buys, I believe, on Coke, Pepsi, and Keurig Dr. Pepper.
Correct. Like the soft drink companies have performed a lot better in terms of fundamental results and even in the stock performance. You're seeing, look, clearly a significant shift in consumption towards non-alcoholic beverages. The carbonated soft drink companies like Coke and Pepsi and KDP have clearly been able to respond better to the change in consumer behaviors, right? Like a couple of years ago, there was this whole shift to non-sugary options, but they were able to adapt their products. Like the zero sugar offerings are really doing very well for Coke Zero Sugar, for Pepsi Zero Sugar, and the same for Dr. Pepper. And the important thing is the pricing environment is very rational in carbonated soft drinks. So these are companies that consistently grow 2 to 3% their top line, even though the categories are not necessarily the most on-trend categories, like energy drinks, for example, which is a category that is really expanding significantly in the U.S.
And just finally, on the soft drink front, can you generalize? Is this a business where generic supermarket brands have taken a huge share, or have the likes of Pepsi and Cola been able to fend them off?
Yeah, it's interesting because the private label of their store brands, they haven't really been able to take significant share. They've been averaging around 5% market share in the US. If you look at some European markets where private label is more developed, you are seeing levels of north of 10%. But in the US, Coke, Pepsi, KDP have really been able to maintain their share. I think a lot of it is their innovation, and especially, as I mentioned, the zero sugar options have been very, very successful for all these companies. So actually, they've really been able to maintain their overall market share. You're definitely seeing Coca-Cola doing better than Pepsi, and Dr. Pepper also taking some share in the category. But private label overall has been pretty stable, around 5%.
5%. Filippo, thank you very much indeed.
Absolutely. Thanks for having me.
Filippo Falorni, Director, U.S. Beverages at Citi Research.